Welcome back to Golden Rule Radio, your source for a brief weekly summation of the precious metals markets. Each week we'll focus on what's happening in the markets related to the metals, the news that moves those markets, and what's on the horizon. ICA is a 45-year-old precious metals brokerage and advisory firm, and we are tracking this information daily. Today is January 25th, and in addition to the metals, we'll touch base on the U.S. dollar, the Federal Reserve, and some listeners' questions. And in that regard, Tridar Durakar asked, so is 50 the magic ratio to trade in your silver for gold?
Tridar, that's a great question. For the last couple decades, we've been tracking this information pretty closely, and we do like to work with our clients on the best times to transition from highs and lows in those metals. So I know Robert's been looking at this stuff pretty closely. Robert, what do you think?
One, it depends on your entry point. Two, call us because it needs a personal recommendation. And three, we don't do a trade unless we're trying to net about 20 to 40%.
So Tridar, that's not to indirectly answer your question. It's just to point out the significance of the fact that you really need to call one of our advisors because we need all of the information before we can answer that question succinctly. The other question, Michael Corey, did the World Gold Council ever call for lower prices in the coming year between 2011 and 2015? That would certainly shed light on any value of their expectations. Miles, you want to run with this?
You know, this question made me really happy because we spend a fair bit of time reading the political speak out of Janet Yellen, reading the political speak out of Washington, D.C. on other things. So I actually did go back through their website. I read the 2012, 2013, 2014, and 2015 reports. So here's what I found. Indirectly, actually, yeah, they did. If you look at it from the Janet Yellen Federal Reserve speak standpoint of we're not really going to say what we don't want you to hear. So in 2016 or the 2015 end-year report that was talking about 2016, they did actually come out and say, yeah, we expect gold to go up this year, and it did. But you go back and look at the 2012, 2013, they went out of their way to say something along the lines of, we don't know.
So what's not mentioned is
exactly
your answer, basically.
So it's like reading the FOMC Fed report each month. We expect things to get gradually not as good, and which is basically them saying, no, we do expect it to go down. So you're absolutely right. And yeah, I would say from that standpoint, they were somewhat honest about it, although it would be nice if they did just flat out come out and say, nope, going down.
Well, valuing anyone's or any group's expectations too highly is never a good idea when it comes to a market.
That's a great point. And that segues into, we're going to give you as much information as we feel like you can absorb in a brief podcast of this nature. And we're also going to assume you have a basic understanding of charts. We're not trying to be overly complex with our charting. And so the images that you see here, ask us if you've got questions on them, and we'll address those the next week. But let's get into gold, Robert.
Well, we should go back just to throw a chart up of the gold-silver ratio so that Tridar, you can see the highs, the lows, somewhere where the average is, and to make your own assessments. But we do, again, encourage you to call us because it is on a personal recommendation level that we try to engage with our clients.
So in regards to gold so far in 2017, Robert?
We are seeing the correction we've been waiting on. And if gold closes below 1192, I think it's going to go a little bit lower. On the move up into the 1200s, it had a hard time breaking 1220, so it looks like it kind of created a 1220 to 1190 window here, and we'll be watching it closely to see which way it breaks out of that small range. In terms of silver, silver's going to follow gold like it always does. And 1670, I think, is probably the short-term support. So a close below that, it would move silver a little bit lower. So this is the buying opportunity we're looking for.
I totally agree. What about the other white metals, Miles?
Platinum and palladium actually following similar patterns. When I first put my notes together, they were both climbing while gold and silver were falling, but that's no longer the case.
And what about palladium?
Yeah, palladium's down $54 already today.
Over 6%.
Yeah, 6.7% right now. So when I was putting my notes together earlier, we were up 9.8% on palladium for the year so far, but obviously that's not still the case.
That helps the platinum-palladium ratio that we also follow closely. And so, we're going to get into later, especially next week, a little bit about what Trump means for metals. That's probably the bulk of our clients' questions.
Correct. We've had a lot of people asking that.
So next week, we're going to put a lot of emphasis on summarizing for you some of the economic fundamentals and how they push and pull on the gold and silver prices. So stay tuned in that regard. And let's get into quickly the other markets there, Robert.
Finally, the Dow has broken 20,000. Everyone can celebrate.
Yay.
Not to be
on a gap open. I don't think that counts, personally.
Let's see where it closes.
Yeah, let's see where it closes, because it will fill that gap. It may not happen today, but it's going to happen.
Equities are still very overvalued and may move higher, but we look at closes below the S&P at 2250, NASDAQ 5,000, maybe a little bit higher than 5,000, and Dow at 19,690, 700 as a sell signal. And as the equities market has been going higher, I've just been salivating over shorting the market.
So with the strength in the equities markets, we're obviously keeping a close eye on the currency markets as well, and the U.S. dollar index is no exception. It's obviously at some key points here, Miles, if you want to sum up.
The U.S. dollar index did break below the magic 100 level and did close on Monday, the 23rd, at about 99.93. We're currently sitting just a few pennies below 100, and we are having a red down day today.
102 will be the level to watch, as the dollar, I think, has a little bit of a bounce in here. The dollar index retraced exactly a fib level of 0.618 from top to bottom, above 104 down to just below 100. And the dollar is under pressure, but I do think that we may be ready for a short-term bounce up towards that 102 level. So we'll be really watching the dollar index closely for an indication on our next direction.
Although I'd also argue that with the Dow big jump today, not big jump, but gap jump up today, I wouldn't be surprised if we do see the dollar hold below 100, at least for a short time.
Central banks, we're not just tracking the U.S. dollar and its effect on the nominal value of gold here domestically. We also have to track interest rates and some of the other things that the central banks do from an intervention standpoint, and the Federal Reserve is no exception in that regard. Hawkish Jeffrey Lacker of the Richmond Fed is calling for higher interest rates to curb inflation. So the inflation concerns are out there. We'll touch base on this again next week. But keep in mind, too, that Lacker is just one voice, and he's also stepping down as a Fed pres in October of this year. The FOMC is January and February 31st through 1st. So we're wondering, could Yellen sabotage Trump by raising rates quickly? We're just going to have to see how that plays out. And again, tune in next week. In terms of specific metals recommendations, Robert, where are you leaning?
We've recommended the US $20 gold pieces the last 2 weeks, and the sweet spot in the grades that we like are trading at about 60% below the average. So just a reversion to the mean type of trade would bring that up 60%. That's not even mentioning the gold price move that we're going to see in the next few years.
I totally agree. And that premium play is what we advise and manage for clients, and it's not to be forgotten. What else, Miles?
Well, it's tax season, so we're doing a lot of IRAs right now. If you weren't aware, believe it or not, you can actually put gold in your IRA. I'm not talking about gold ETFs, mining share company funds, anything like that, but physical precious metals. And in fact, a large percentage of our client base does also have IRAs with us. So if you have retirement account money, you don't appreciate the returns you're getting, or would just like a safer haven, definitely give one of our advisors a call. We can talk you through how to place precious metals into an IRA.
Our ratio trading strategies over the years have provided significant returns to people. In an up move in the market with gold rising, in a downward move with the gold price falling, sometimes our best trades to increase ounces is actually in a declining market.
Thank you, Miles and Robert. And thank you, listeners, for tuning in to Golden Rule Radio this week. Send us your questions. Make sure to follow us on Twitter as well at ICA Gold. Subscribe to us on YouTube by clicking the subscribe button below this video. Remember, next week we will give you the fundamentals shaping up under a Trump administration that will impact the precious metals prices in 2017. Tune in or call us this week as well at 800-525-9556 and spend some individual time running through a total portfolio analysis with one of our advisors. The Bill King interview on the McIlvaney Weekly Commentary is also a strong suggestion. Just click the video on the screen. Thanks again for listening. We'll see you next week.